Hi guys, this is KP from InvestorWise, and excuse me for my looks right now. I'm in the gym, and that's where I feel you beat the stress when you see say, Nifty going down by 10% in a day, and then it is again up by 5%. So, a lot of requests coming in to make a video. I know I've been late in making video, but I don't want to come up and speak anything stupid that comes to my mind. Need to observe the market. There are a lot of dynamics which play. This particular downfall in the market is not similar to what happened in 2008, or it happened in 2002, or it happened before that. This is different from all other market debacles which we have seen, for one simple reason, that we are not witnessing a financial issue right now. What we are witnessing is a health hazard which has taken place throughout the globe. Okay, and yesterday WHO has declared this not as epidemic anymore. This has become a pandemic. So the thing is, more than what we ought to do, you need to understand what you need not do at this point of time, which 90% people probably are doing. So I'll give you few points to keep in mind regarding what you shouldn't be doing in this market. One, you should stay away from futures. Futures and derivatives should not be done. I don't care if you have 20 lakhs in your demat, or if you have 50 lakhs in your demat, or you have 5 lakhs in your demat account, or you have some thousands in your demat account. That does not matter at this point of time. Given the volatility in the market, absolutely stay away from futures. That is point number one. No matter how brainy you are, no matter how much you feel you or your advisor understands this market, which is just a pretension. Nobody understands this market. If people say they understand this market, they understand which side market is going to go, then they're just in a fool's paradise, and they're making a fool out of you as well. Okay, stay away from futures. Number two, stay away from intraday trading. Don't do intraday trading. Please avoid doing that, because when you see Nifty goes down by 10% in a day, and it again goes up by 5% the same day, intraday trades can turn out to be very dangerous for you. You need to avoid doing intraday trades. A lot of people will speak a lot of things, but don't listen to them. Right now, it's time to wait and watch. Okay, point number three is that stop buying or selling shares based on this paid media. Don't listen to the media. You listen to media for gaining knowledge. What top analysts and brokerage firms are saying, have knowledge, gain knowledge from them, but don't take any trades, because the thing is, you need to understand, for them, if they stop giving advisory or if they stop giving recommendations, their channels won't get sponsors. Need to understand these things. So when they recommended HDFC Bank at 1250, stop loss hit. They again recommended at 1175, stop loss hits. They again recommended at 1125. For them, it's a business. You are getting trapped in the process. Okay. So three things you got to avoid at this point of time. Number one is no futures trading. Number two is you shouldn't be doing any intraday trades. And number three is stop listening to paid media or these gimmick creating advisors out there, because there's so many of them out there. I was reading somebody writing yesterday that when the entire nation was crying, my clients have made thousands of rupees in intraday trades. It's so easy to fall for such people. But you being everybody is following InvestorWise, but everybody who is my client, I expect them to have some level of maturity and not take any trades based on these paid media or gimmick advertisers. Next, what can be done at this point of time? That's more important now. What you can do is, whatever you're holding as investments, continue holding them. Yes, the stocks have gone down by 30, 40, and in some cases stocks have gone down as much as 50% or maybe more than that. But if you trust the quality of what you have purchased, you need to stay with them. You need to stick to your stocks. And okay, once the stability comes in the market, we can start averaging. I give you another example. Suppose if you have purchased Reliance at 1,400 odd bucks, and today Reliance is trading at 1,000 bucks, maybe at 1,000, if you have 100 shares of Reliance, maybe you can add another 25 at this point of time. You have to go slow. We don't want to create a lot of exposure. We don't want to put in a lot of money in the market at this point of time. We need to wait and watch, and slowly maybe we can start averaging our stocks, the ones which we feel are fundamentally good. For that, if you're my client, or even if you're not my client, does not matter. You can drop me a message and I can tell you what is the right time to average your stocks. Point number two, do not panic sell anything that you have. This is not the time when you will panic sell your stocks, okay? Because It's not just the Indian equity markets, it's the global markets which are going for a toss, and you need to pay respect to the circumstances which we are surrounded by. It's a macroeconomic problem, systematic risk. Nobody can fight it out. Crude prices are going down, gold prices going up. Now suddenly gold prices are also coming down. You need to be very, very cautious in whatever you do. No stupidity. Please hold back on your stocks. Okay, you don't want to make further investments, don't do that. But please don't take out your money from stocks which you already have. Have them with you. Have faith. Markets will revive. Yes, this time I'm repeating myself. Nobody knows when markets will come back on track. Today what has happened seems to be a momentary thing. It may not sustain again at the higher levels, and I feel markets will still go down. That's what my understanding is, because we don't see coronavirus being in control from any angle. That's the harsh fact. Okay, please don't curse me for that. It's my job to speak truth to you. Okay, so I don't see markets coming in a revival mode anytime sooner. But then we have to show patience. You just can't sit in front of the screen and keep tracking the stock day in, day out. That will make you go crazy, bonkers. Don't do that. You have time, spend for quality things. Read a lot and try to understand the economic situation. Take care of your health right now. That's more important. Don't go into depression mode just because of equity market. Equity market is just one investment avenue, but have to look at a picture beyond that. Another thing that you can do right now is you can just, if you don't want to do any fresh buying, that is fine. You can just hold on to what you have. If there's a margin shortfall, pay some margin. Don't allow the brokerage house to liquidate your positions. We don't want them to liquidate our positions when markets are going through a tough time. Okay, can we do fresh buying at this stage? Yes, we can do it, but we need to be very, very conservative about it, because we can't do bulk buying at this point of time. Don't get overexcited and buy like 100 shares of Reliance or 200 shares of Piramal or like 500 shares of HDFC Bank. Don't do that. Don't buy such huge quantities. Yes, everything is looking attractive, but we never know. 3 days back, a lot of brokerage houses were giving buy recommendations on many stocks, but yesterday and today the markets have again gone down by huge gaps, right? So we don't know what is you can't do bottom fishing at this point of time. We don't know exactly where this consolidation is going to happen. You need to understand, when things are not going good at economy level, then your market cannot be an exception to it. India has just reported 75 cases of coronavirus. No. Don't go by that. That's the number which has been reported. That's not the actual number. Trust me, the actual number got to be much more than that. Maybe more than 20-30 times of what has been reported, or maybe even much more than that. Don't go by those numbers that India is unaffected and all. Don't go by that. You need to understand, if this situation is going to get worse, markets are going to reflect the same. Okay, and so that's all from my side. I'll keep posting more videos from my end, but I have to be very, very prudent when I'm making videos. I can't give you any suggestions recklessly. I need to be very careful while I'm making videos. So for me, it is wait and watch. Once I have some something concrete in my mind, only then I can post videos. Okay, till that time I'm available on WhatsApp. You can drop me your messages. Okay, and today I've given some recommendations. You can take them. Again, when I gave those recommendations, few of these stocks which I recommended are already 100 rupees up, but I never claimed intraday they will give you good returns. That's why I never posted the target or the horizon period. For me, those stocks at these prices were looking good, so I posted them on InvestorWise. That's it. When I find something is looking good, something is looking safe, being very, very conservative, if I find something is looking nice to me, attractive to me at a given price, I give you a recommendation to buy. Another thing is, go for staggered buying. If you feel you can buy 100 shares of Reliance, never buy them at one go. Maybe you can pick up 25-30 shares first, then again wait and watch for a couple of days, then pick up another 20-25 if corrections happen, and so on and so forth. Okay. So, any suggestions required from my end, please get in touch. Is this good time to start investing in equity altogether if you have never done it before? Yeah, as an advisor, I would say this is a good time, and become a client of InvestorWise. Okay, you never go to a barber and ask if you need a haircut. Okay, barber will always say, yeah, you need a haircut. Okay, so stay bullish. More importantly, stay safe. Avoid going to social gatherings. Maintain your hygiene. Wash your hands as much as you can, as frequently as you can. Staying safe is more important. Only if you are alive, money will be useful for you. Bye guys, cheers, God bless. Thank you.